Welcome to the Art of Money Podcast with Art McPherson.
And this is the Art of Money Podcast with Art McPherson and Luke McCarty, artofmoneyradio.com for more information on the McPherson Financial Group or to schedule that initial complimentary consultation. We appreciate you listening. Now, let's get to the show. Hey, let's go ahead and get to it because as you were shopping, it's like going to Target, Walmart, IKEA. It doesn't matter. You're leaving spending more money than you prepared to because inflation, 8.2%, the new numbers that came out late last week. Now, but Luke, is this just the new normal with inflation?
Everything the Federal Reserve has told us this last year has been wrong, right? It started off saying inflation is transitory, inflation has peaked. Inflation won't be here very long. You name it, right? It's been wrong. Mm-hmm. And so looking at it now, right, the CPI number came down from a peak in June of 9.2. Now it's 8.2. So it's coming down. But the problem they're having now is there's multiple different levels of inflation, meaning different calculations.
Yeah.
And the core inflation is rising. So core inflation went from 6.2 last month to 6.6. And that's heavily weighted on rental rates and housing. And so their potential, we may see inflation kind of either go up or just kind of be really slow to go down. And I think it's the latter of the two. So to answer your question, I think we do, inflation is here longer than expected. Mm-hmm. And that's one of the reasons why in the YouTube video I mentioned about IBonds is because, when there's an inflationary rate, that's a great investment.
I know you don't have a crystal ball, but do you think we'll see the days of 6-7% inflation ever again?
I think we will, as long as, there's not another big event or a big stimulus or spending. Part of what's happening is all the trillions of dollars that have been printed in the last 4 years are making their way through circulation. Mm-hmm. And the reason why we haven't really had a recession yet is because the consumer has a lot of cash, and so this fear of a recession may not happen as soon as expected, right? It may be a little further down the road as the Federal Reserve continues to raise rates.
Okay, but I thought we were in a recession because if you just look up the same definition of a recession for the past 100 years, 2 months of negative GDP growth, which is what we're in. But now everyone's trying to change the definition. So, Luke, where are we?
Yes, so technically we are in a recession from that, from that perspective and that calculation. Our perspective here, the unemployment rate's going down. It went down a couple weeks ago to 3.5%. Mm-hmm. So people still have their jobs. If you go out to eat or go travel or go on an airplane, everything's super crowded. I was in Nashville a couple months ago and it was packed.
Oh.
Airport was packed. Flight was packed.
Bars were packed. Restaurants were packed.
Yes.
Broadway was packed.
Everything was crowded. If you look at, even recently this last weekend when, you see the scenes of the University of Tennessee upsetting Alabama, mm-hmm. How many thousands of fans were there and how much did they pay for those tickets? Mm-hmm. So even though technically we're in a recession, it doesn't necessarily feel like it, when you walk around or when you spend money. It just feels like things are more expensive. And that's not a good sign either.
So what can we do, or Luke, what should we be doing right now? Because we still have record high inflation. It may not feel like we're in a recession, even though we technically are. And a lot of the experts and pundits saying a real recession, it's on its way. What should we be doing right now?
Sure. Well, you need to have a financial plan, and your financial plan needs to tell you, hey, in this type of environment with these types of returns, with this high of inflation, are you still okay, right? Do you make it to the end of your life with X amount of money to give to whomever or to just not run out of money? So that financial plan is going to give you peace of mind. You also need a diversified portfolio. Now, historically, a diversified portfolio was different types of stocks, different companies, different bonds, different maturities. Well, this year, stocks are down, bonds are down, gold is down. Cash is barely making any money. So you need other pieces of your portfolio that haven't lost money, some of them that have guarantees. I was just looking up, like a fixed annuity for a client early last week, and you can get a 2-year fixed, can't lose money in the market for about 4%. Mm-hmm. If you go out to 3 years, you're looking at 4.5%. So if you're searching your local banks for CD rates, I haven't seen any that high, but it's those products and those types of instruments are becoming more and more viable as the Fed keeps raising interest rates, right? I have never used a fixed annuity in my whole career until this year. because most of my career there hasn't been an interest rate.
So, Lou McCarty, 4%, that's a good thing. But as we've talked about here multiple times here on The Art of Money, that there are layers to fixed annuities. So how do I take advantage of that?
Sure. There's layers to fixed annuities. There's layers to all types of investments. But if you give our team a call here at McPherson Financial Group, we'll see if it makes sense for you, how much of your portfolio should go into something like this. At 4% for a couple years seems good now, but if the interest rates keep going up, maybe we get a little bit better, right? If rates go down, because if we're in a recession, these may fall off. So give us a call and we'll see if it makes sense within your financial plan.
To begin that conversation, give Luke McCarty, Art McPherson, the team at the McPherson Financial Group a call. 321-425-8550. Luke, during that last segment, you brought up that now may be a good time to take advantage of an IBond during this down economy. Why now?
Yeah, so if you purchase an IBond before October 31st, right, you lock in a 6-month rate of 4.82%. Now, if you go online to treasurydirect.gov, you can see that it states that, really loud and I guess kind of proud, but it means we have an inflationary environment, but loud and proud 9.82%. Well, that's your 6-month rate doubled. So November 1st, it's going to reset. The next 6 months will reset. It's probably going to be a little bit lower because inflation has come down a bit, but it's as guaranteed gets because it's from the Treasury. Mm-hmm. And so, it's technically a 30-year bond. You have to use cash to purchase it. Cannot be purchased in an IRA. Your limits are $10,000 per person per year. And if you can make around 7, 8, 9%, it's a heck of a lot better than a CD, heck of a lot better than the bank. There's rules around it. It's not liquid for the first year, so you cannot sell it within the first year. If you sell in the first 5 years, you lose the last 3 months of interest. So a lot goes into it. Call us. We can help you. We're helping our clients navigate the world of iBonds right now because, unfortunately, it's not something we can buy for you.
Right. So you cannot set it up for us, but you can guide us and you can help us out with putting an iBond together.
Yes, I can guide you through it. You can come in the office. I can help you online, but it's you registering with the U.S. Treasury as yourself with your new account. So I can't be too involved, but I can help.
And something else that, we're talking about these high inflation rates. We're talking about interest rates. Well, also something that isn't even being scratched on the headlines, which is a little shocking to me, is that the latest national debt has surged to $31 trillion. Never been this high in our lifetime. Luke, I'll be honest, it seems like we should be talking about this a little bit more, but nobody seems to care, especially that we're in an election year as well. So, Luke, if the government isn't worried about our debt, why should we be?
Well, we should be worried about it, or our kids or our grandkids will have to worry about it even more. Looking at the national debt, 2018, so 4 years ago, right, it was about $21 trillion. So in the last 4 years, we've added on about $10 trillion of debt. Went from 20 trillion to 31 trillion. These numbers are very much unsustainable. Mm-hmm. And it seems odd that our elected officials don't seem to care too much about it. Now, I know a lot of money was printed for COVID. We can get political about that if we want to, but either way, it was too much. And, we're seeing $31 trillion of debt. That's insanity in my mind.
This isn't just us. This is our kids. This is our grandkids' kids. They're going to have to be paying this off.
Yeah, for sure. And so we've taken the stance, well before 31 trillion. I say, when the Trump tax cuts in 2018 and we were 21 trillion, mm-hmm. We've taken the stance that, hey, even though we have these tax cuts, that's going to raise the debt, right? That made the government's revenue less and the government continues to spend more. So now's a great time to do some tax planning, right? If you could shift or move your assets today at lower tax rates, and in the future, when all this 31 trillion or whatever trillion the number is, when they decide to take care of it, it may not impact you. Maybe all your assets are tax free. So, a raise in tax rates don't impact you. That would be a great retirement, in my opinion.
And, we can't blame Democrats, we can't blame Republicans, because I think the last time that we had zero debt and it was under control was under Clinton. And then since then, it's been Bush, it's been Obama, it's been Trump, it's been by everybody. Everybody is responsible for $31 trillion in debt. But it's also the importance of having that tax strategy because, Luke, as you said before, we know higher taxes are coming and we don't know how bad it's going to be. But, Luke, you can put a strategy together to help protect our assets.
Yeah, definitely. I mean, tax rates are going up, so you need protection from taxation, right? You need protection from the stock market. We've had a very wild 3 years, right? We had COVID hit, the Fed bailed us out, went down 20, 30%, right back up 20, 30. And then we had all this, kind of inflated asset pricing for the last year, a year and a half. Well, we've seen that fall off recently too. And so now we're seeing a very volatile period where it could be similar to 2000 to 2009, where you may not have made any money if all your money was moving together. So you need a plan for taxes. You need a plan for investments. And that's what we're here to do. The team is here to help you. And, we'd love to have a conversation.
Yeah, and that conversation, no cost, no obligation to you. 321-425-8550. One more time, 321-425-8550. And Luke, you mentioned the Fed because inflation shows no sign of letting up, and the Fed likely going to raise interest rates again to try to rein some of this inflation in. But economist Mohamed El-Iran tells CBS News that at this point, the Fed, they're just trying to save face.
There is a possibility that the Federal Reserve makes another mistake. That is the cost of a Federal Reserve being late. Not only does it have to overcome inflation, but it has to restore its credibility. So yes, I fear that we risk a very high probability of a damaging recession that was totally avoidable.
So we can't control what the Fed does. We've learned that over the past 6-8 months, but we can limit what the upcoming recession does to our retirement portfolio. So what's our strategy now, Luke McCarty?
Yeah, so the strategy now is to potentially move assets out of the market, from the correlation of the market, right? If your stocks are down 25% and your bonds are down 15%, they're not doing what they're supposed to do. So you need different asset classes, whether that be an annuity, whether that be a preferred stock, whether it be, farmland or, rental properties or real estate, or, you name it, go down the line of things that aren't as tied to the S&P 500, right? Alternative investments, and kind of piece together a portfolio that can withstand events like this. The opening to the show was a good quote from Art McPherson of, we know the next event is coming. We don't know when, and we don't know what it's going to be called. So is this event in the history books going to be called, the inflationary event of 2022? Potentially, or the recession of 2023 caused by inflation in 2022? Possibly, right? We don't know what it's called, and we don't know if we're at the bottom right now. Peace of mind as an investor, would allow you to not have to really worry about all the ups and downs of the markets, and know that based on your financial plan, you're going to be okay because of the investments you have in place.
Thanks for listening. Want more from Art McPherson of McPherson Financial Group? Find us online at artofmoneyradio.com. We are an independent financial services firm helping individuals create retirement strategies using a variety of financial and insurance products to custom suit their needs and objectives. Securities offered through World Equity Group, Inc., member FINRA and SIPC, a registered investment advisor. Investment advisory services offered through ProStatus Group, LLC. McPherson Financial Group and ProStatus Group, LLC are separate entities and are not owned or controlled by World Equity Group, Inc. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Investment financial professionals are not licensed in all 50 states. Art McPherson is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstances. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Arthur McPherson. Florida Insurance License number A174. 725.
Today's show has been a work of art.